Hey, what's up, everybody? Good morning and welcome back. This is the Multifamily Unplugged, and it is Saturday morning. I certainly hope you're enjoying your weekend. Sometimes I can record these podcasts or do them live even. And, once in a while, it just seems like it's been a long time. So I feel like it's been a long time since I've actually been back here uh, putting, recording or being live. And if you're listening to the recording, I'm glad that you're here. If you're listening live this morning, I'm glad that you're here. Super excited about our guest this morning. But, before we jump into that, I always want to try and talk to you about something that might be going on in your life. And I don't know what that is. Only you know what that is, whether it's relationships or whether it's finances or whether it's business, but whatever those situations are, there's always a way through, and I always think that if we're intentional about our actions and what we're trying to accomplish, that is going to help us through, no matter if it's a good situation we're working through, trying to grow it even more, or if it's a tough situation that we're working through, trying to get a handle on it and focus on it a little bit more. Either way, that works in your best interest. All of us continue to grow and move forward because we work through that stuff. And, and I even talk about it from a standpoint that, even when things are going great, you've got to be aware of your surroundings. I think sometimes in my own life, what I do is I work in with blinders on, and I sometimes don't use my peripheral vision to see what's going on around me. And I think that we all need to pay attention to our surroundings, the things that are happening outside of us. I equate that a lot to the fact that I've been so focused for years on market rate rent multifamily and really haven't done any other asset classes till recently. We've started to explore other asset classes and to do investments in those other asset classes. And, it's interesting what else is out there. So, if you have questions, if you're looking for insight on maybe something you're doing, just reach out. I'd love to have a conversation with you. And for those of you who are new, I hope that you will follow us either here on YouTube or Instagram or LinkedIn, but just join our community, get involved with us. We're always bringing great guests and information to you to help you and your business grow. So I want to jump in here. Our guest this morning, Dave Wolcott, super excited. He's with Pantheon Investments out of Sarasota, Florida, and they're a fractional family office company. Dave is the author of a book called Holistic Wealth Strategy, and we're going to dive into that this morning. But why don't we bring Dave in and say hello to him? Morning, Dave. How are you?
Morning, Mike. Really grateful to be here to connect with you and your audience.
Yeah, good to see you again. Hope things are going well. It's got to be starting to get hot in Florida, huh?
Yeah, but there's always shade, a pool, or the ocean nearby. So,
yeah, I lived in Chicago forever, and 3 years ago I moved to the West Coast. I always wanted to be on the West Coast, and people said, "Why don't you just go to Florida?" And I said, because they have bugs there that they don't even have names for. So. Yeah, it's kind of funny, but hey, I always start my show with one question, and that is, in one word, what best describes you personally and professionally?
I'd have to say freedom, Mike.
That's interesting.
Yeah, because for me, right, it's my number one value, which is all about creating freedom of purpose, to wake up every day and be fascinated and motivated about the work I'm doing to create impact. It's freedom of money, to have complete abundance and unlimited potential, to, again, create impact in the world. It's freedom of relationship, right? To spend my time, having a quality conversation with someone like you today, right, in my day, and then the people I surround myself with, right? And it's freedom of location. to be in Florida where I don't have to shovel snow, I don't have to pay state taxes, and I can live a healthy lifestyle and kind of do the things that are important to me. So I think really freedom is my number one value, personally and professionally.
Yeah, that's awesome. Good for you, Dave. That's great. And I probably asked that question 300 times on podcasts over the last several years. And, it always sticks out to me when somebody has a word that somebody else hasn't said or that I haven't heard from somebody else before. And freedom's obviously one of those words. So that's cool. I'm going to make sure that makes it to the book that I write, because I'm going to write a book here one of these days, the one word, right? And I'm going to take all of these abstract words that people have said and write about them. So I'm sure that's going to end in the front section. So thank you. Dave, why don't you tell us a little bit about you, what you do, and who, Fractional Family Office is?
Yeah, sure, Mike. I think it'll give some context to the listeners because honestly, like I've walked in everyone's shoes that's out there before. So for me, I finished college and did the ROTC program in the Marines. So I had the opportunity to actually serve my country. And we were really raised in a middle-class family in Connecticut, and we didn't really talk much about money. In fact, money was something that was scarce. There were things like, money doesn't grow on trees. My dad was always working hard, got home at 7:30 at night, every night. And it was just really rare to talk about money. So, I went down this path of go to school, get good grades, you'll get a job, and life would just kind of work out, right? So after the Marine Corps, I transitioned into the tech industry. And shortly thereafter, we had an 18-month-old. My wife and I were building a family. And on October 24th, 2000, Mike, we literally had triplets.
Oh,
and quadrupled the size of our family
congratulations.
overnight. Yeah, exactly. We hit the baby lottery, right? But at the time I was 26 and they say it's $1 million to raise a child. So that's like, okay, that's 4 million. There might be some kind of retirement there. That's another 4. And the first thing I did, Mike, was like, I literally went to see my financial advisor the day after. And he just told me, he said, hey, don't worry about it. Just max out your 401k, and then you can invest in 529 college saving plans for the kids. And it was right then that I knew, building real wealth wasn't going to happen as a retail investor in the stock market. So this launched me on this obsessive journey to really figure out how are the top 1% actually building wealth. Right. So I looked under every rock. I read every book. I started investing in single family, multifamily. I invested in office. I invested in retail. I invested in raw land. I invested in oil, gas, even alternatives, back in the day. And keep in mind, this is 2000, right? And Rich Dad Poor Dad literally had just come out like the year before. So I read Cash Flow Quadrant. That was a huge eye opener. And I knew I had to become a business owner, an investor, get to the right-hand side of the quadrant. And then 20 years later, I built a phenomenal portfolio for myself. And I really founded Pantheon to really help other people figure out the opaqueness of this alternative wealth strategy on how to really build wealth outside of Wall Street. What does that look like, right? So people can actually live their best lives.
Yeah, awesome. What a great journey. What a good story, that's for sure. So I know you wrote a book called Holistic Wealth Strategy. What are some of the keys in there kind of inspired you to write that, obviously because of what people need in their future for, a good, safe retirement. Let's talk about some of the key points in that book.
For sure, Mike. Throughout my journey, right, I discovered that this world of family offices, ultra high net worth individuals, right, people who are truly sophisticated investors doing really well, there's a lot of opaqueness in private markets, and that's on purpose. It's very intentional, right? If you're a retail investor investing in the stock market, it's very cookie cutter and it's a common approach. This approach is not for everyone, but I know your listeners, right, who are either active or passive investors, really got into real estate because they're trying to build wealth, right? So the book has 5 simple phases, and it's all underpinned by the most important thing ever, Mike, which is all about creating a vision for yourself. If you don't have a target, you're going to miss every time. So getting crystal clear clarity on what that vision for your life looks like. Where do you want to be in the next 3 years, in the next 10 years for you, your family? And you literally need to describe how it feels, how it smells, how it looks. Where are you? Who are you spending time with? What are you doing? What does your portfolio look like? The book Vivid Vision by Cameron Herold is phenomenal around getting that type of clarity to actually build out this vision, because once you have this vision, then you can actually break through walls, Mike, right? You can go through the challenges that you're going to go through to actually get there, and then you'll be much more in alignment with yourself. When opportunities present themselves, you'll know, is that aligned to my vision? Or if it's not, it's a lot easier to actually just say no and move on.
Yeah, that's awesome. You know, I want to touch on the fractional family office thing for a minute. So, you know, historically, my understanding of a family office was always someone that was ultra high net worth, right? They had $100 million. They exited a business. They built a company and sold it, and they had a pot of money, right? And those people were traditionally family offices. It seems today that people use the term family office more freely. Am I reading that right in today's marketplace?
It means a lot of things to a lot of people, Mike, but the way we define it is, you know, being on this journey for 25 years, right? We are really passionate about helping people understand a comprehensive wealth strategy that's alternative to traditional financial planning, that helps you with the 6 forms of capital, which is ultimately what you're trying to achieve fulfillment. So it's not only financial capital, it's intellectual capital, it's spiritual capital, it's human capital, it's social capital, emotional capital, all these things that you're trying to build. So how do you do that? Well, you need to create infrastructure. Do you have a comprehensive tax strategy? Do you have a risk management plan? Do you have a plan around liquidity management? Do you have the right team of advisors, a dream team around you that can support you and take you 10x to where you need to be? Most people might just have one advisor. Or if you're a real estate investor, right, you're probably just thinking that you have all your wealth tied up in your own business, right? That's actually the biggest mistake investors make, or, you know, entrepreneurs as well, is when we put all of our assets, you know, in one basket, and you know, that creates an enormous amount of risk. So what we do is a very cost-effective and flexible manner. We can provide this alternative wealth strategy through advisement. The leader of our family office, he was actually managing capital for a billionaire family. And we provide strategies. We have tax strategies that people have never even heard of before that can get your taxes down to nominal amounts, right? And outside of being, you know, getting real estate professional status, maybe some of your listeners have that, but if you're investing passively, I mean, we also have ways to do active income tax offsets that people haven't heard of before. That frees up additional capital to now put to work inside of your asset base, invest in another, you know, multifamily building with you or such.
Yeah, that's interesting. So is your client just the high net worth, or
not at all. I mean, you can have a few million, you know, I mean, to start with, right? It's never, and it's all about the trajectory for people. We're trying to, you know, really democratize this service and bring it down to people who are looking to scale. It's not, you know, someone with 100 million in net worth has an entire full-time staff. They're paying 7 figures for a full-time team. We're doing this in a fractionalized way. And the other thing is, Mike, we've developed a proprietary AI-based software where you can actually upload any one of your entire, you can have single family, Airbnb, venture capital investments, private equity investments, angel investments, syndications, real estate, you name it. It all gets sucked up into this platform. And now you can have, full visibility into your entire portfolio, and then put AI analytics on it to now say, let's do some scenario forecasting. What if I buy that next deal? How does that impact my cash flow, my financial freedom number, and things like that? So we use that as really the core to help people, really have clarity and visibility into their holdings and how they can reach their goals that much faster.
Yeah, that's interesting. And that platform, do you sell that as a product to people, or do they need to be a client of yours to take advantage of that?
Yeah, so our initial founding members, I think we have a few seats left, and people could go to pantheonwealthos.com and get 6 months free. I think we have a few spots left for early investors right now. Got
it. Interesting. And so where are you seeing, and I want to shift gears here a little bit. What are you seeing investors today invest in?
Well, I mean, outside of public markets, right, I think a lot of people have been very gun shy, right, with commercial real estate assets in the past 2 years. We've certainly put on the brakes in multifamily, right, as the market is bottoming out. We're just starting to see some new opportunities. But for us, we don't really like to follow the pack. We actually like to do, non-conventional type investing where we find really strong operators. Our investment thesis focuses on 3 core asset classes, which is real estate, energy and infrastructure, and then private credit. So for instance, we have a private credit fund that's averaging about 2% a month, phenomenal cash flow that continuously compounds, non-correlated to the stock market. And it's all about investing in Main Street, right? Small businesses that need capital to grow, and they're constricted by, bank lending requirements, right? So there's a significant opportunity in that market. So we focus there. We also focus on, oil and gas. We've deployed about 30 million in oil and gas just in the past few years alone. And that's even before, the tailwinds we're going to get here from commodity prices going up. And because we believe, right, with all the demand in AI, doesn't matter where you live in the world, right, the demand for energy is going to just continue to outpace. So we like to invest where the puck is going, where we have strong macroeconomic fundamentals, and we can place capital for a long term versus chasing a shiny object.
That's interesting. So let's talk about this. The last piece you were talking about, the money funding for small businesses, Main Street America. Yeah. Do you have a fund around that people can invest in?
Yep.
And then is that like to the business owner, is that like hard money?
That's a great example. It is hard money lending. If you're in real estate, it's basically hard money lending to a business owner. And in fact, 20% of our portfolio is actually hard money lending in real estate assets. But the really cool thing about this model is that at any given time, we never take more than a 5% position on any given loan. And it's across 15 different industries, everything from, transportation to hospitality, right, to logistics, right, all of these different sectors. So it reduces our risk there. Then we put in a 5% allocation at most, and we start getting paid back. Principal and interest get paid back literally on a daily and weekly basis. So your capital starts to get returned, and then you actually redeploy that immediately into the next deal. So the compounding is is really phenomenal. And yeah, we've been running this for over 3 years. We're actually on our third fund now.
Wow.
It just continues to do really well. And then overall, the private credit market has been growing at a 20% combined annual growth rate. So it's a strong sector to be in.
Yeah, for sure. You know, it seems like that's the hot thing today is people buying businesses and maybe going and getting an SBA loan to buy that business or to fund that business. So do you guys step in you know, with SBA money, or do you act like SBA money is, or am I looking at that wrong?
Yeah, no, I mean, that's probably in the capital stack. If someone's looking at an SBA loan, right, they're going to just tie that up. This is for people that like need capital. Let me give you a great example. So in Florida, right, you know, we had the hurricane the other year. You've got a roofing company. He's literally got 2 years of backlog in business, right? So much opportunity. This guy may not necessarily have the best credit rating, maybe hasn't gone to college, right? But runs a solid business. If he goes to a bank, could take 6 months to actually get funding if he could do it. We can underwrite inside of a week. We collateralize the loan, right, based on their equipment. He gets his capital really quickly. Now he can realize the revenue from that business. So it's a complete win-win, right? That's where we kind of come in to provide that capital for really successful and growing businesses, right? That can't quite get traditional funding.
Interesting. And what's the cost of that capital?
Typically, we're seeing factor rates. I mean, it's about, you know, probably between 35%. So
Wow.
it's expensive. Yeah, it's very expensive. But again, you have to think about it like the cost of capital is relevant in the sense that now he was able to capture that business that he would have had to say no to. And then he pays off that loan within like 7 months and is off to the races, right? But on the flip side of that, as us, we as investors, you know, get a very nice return in a very short amount of time. And I always like to be philosophically, Mike, I always like to invest where when we can be on the right side of the system.
Yeah. How about real estate? So where, you know, considering where we're at in the market cycle, and, you know, maybe a great question is, where do you think we're at in the market cycle? And, you know, how maybe we'll rebound here and come back.
Yeah.
Around that.
Yeah, Mike, I think that we are really like hovering along the bottom, right? I think we're starting to see opportunities present themselves. There's been some nice distressed multifamily funds that we've looked at, which is nice because you can pool together a couple of assets to reduce your risk. Very opportunistic in nature. And as long as you can get the debt structure right, and, you know, there's very conservative underwriting, I think there's going to, you know, start to be some really good opportunities in the multifamily space. That being said, right, real estate is very always geographically depends on which class that you're going after as well. You know, all things that you talk to your, you know, audience about all the time. One area, however, that we found some luck in too, again, looking for really unique opportunities. Our last real estate deal last year was actually in a medical office buildings, right? And here, this was actually a dentist who scaled so well and then got bought by a private equity firm and now is really scaling. It's their own family office. So we partnered with them. We really did a JV with them. And, you know, they own 60% of a lease in a medical office building. They're doing new construction, new builds, as well as value add. And then they just add on, you know, ancillary medical services like, you know, like a orthodontist, right? And those type of services, 10-year leases, right? So they're literally at break even with the dentist who owns it, you know, right out of the gate. They sign a 10-year lease. They're doctors, So you have great tenants in there, and they've been just hitting it out of the park. So we find really unique deals, Mike, and we're very plugged into the family office circuit and really where RIAs and top tier family offices invest, where we can find nice alpha on these opportunities.
Yeah. Interesting. Good for you. Sounds like you guys have a lot of things dialed in. Where are you seeing some holes in the market today, or places that people should maybe watch out for?
I'll share, Mike, it's been a journey, right, for us, me investing personally, right, after 25 years, I've seen multiple cycles, and there's a lot of learning, and it's very important for investors to really take that learning in a very mature way. Every time I lose capital, my mindset is that I'm going to make 2 to 10 times that capital in my next opportunity, right? So I've lost money, right? And yes, it hurts. No one wins all the time. You cannot bat 1,000. The quicker you realize that as an investor, the smarter you're going to be and the more you're going to make it up on the back end, right? We see a lot of people that come into this market, and people get excited about investing in real estate, whether that's from a passive standpoint. They see a really nice pro forma from an operator that looks very compelling. Their friends in it, looks like a great deal. Or maybe you're on the active side, right? And you've got this model, you got a couple of units, things are going well, you're kind of scaling that. But on the passive side, I'll say it's really important to create a diligence process that you are very comfortable with. You really understand who that operator is, because at the end of the day, it's about them executing on that plan to be able to get back the return that they're actually projecting. And we find that the market is actually split. I would define it as 3 different tiers. So you have on the lower tier, you have a lot of inexperienced operators that maybe have just a couple $100 million in assets under management, or maybe even less, maybe just 50 million in assets under management, right? And the returns look better when you get those kind of deals, but just understand you're paying a risk premium for those deals because their balance sheet is a lot smaller. Their resources, their resilience, their ability to execute, there's much more risk in that. The second tier you have is more, I would say, mid-market, which is where a lot of family offices, boutique RIAs play, where we can get institutional quality deals and still asymmetric type returns, where the returns still look good, but your chances of losing capital are very nominal. They will not, let deals kind of fall under. And then the top tier is certainly institutional, right? Where they're investing in REITs, they're rolling up these assets or self-storage facilities, things like that. Here is where you're going to see returns paying, much lower, and they're raising institutional capital, and it's more for retail investors and institutional.
Yeah. Interesting. Yeah, I see the market kind of, starting to open up a little bit. The last couple of years, raising capital on multifamily deals has been pretty tough. I think there's a lot of fear in the marketplace, but I always love the saying, you got to go to where the blood and the water is, because that's really where some of the opportunity lies. And so I think investors really need to take a real good look at where we are in the market cycle today and, kind of walk beyond that fear, because I love what you said, that you're not going to win every time. And, you may have just lost and you're licking your wounds, but, today is a new day and we are definitely at the bottoms. And I always like to say it's like a stingray just fluttering across the sand on the bottom of the ocean, and then they come up, right? And that's what's going to happen. And I think if people wait for the mainstream media to say things have changed, it's going to be too late. You're going to miss the first 18 to 24 months of the cycle, and that's where most of the growth will happen. So I think people need to take a close look at where we're at and jump back in. So that's kind of just my opinion on it. But
Yeah.
so, hey, Dave, I appreciate you being here today. Your insights have been great, and would love to have you back again. And I'll talk to you about that in a little bit. But how do people get a hold of you when, if they want to talk to you about, one of your funds to invest in or get your book? Tell people how they reach out to you.
Yeah, appreciate that, Mike. I think the best place for people to get some value, what I wanted to do for your audience is actually, you can just go to holisticwealthstrategy.com and get a free copy of my book. There, I think there's a lot of learning, through that journey that we passed on, and that's the best place to start the conversation.
Awesome. Well, thanks. I appreciate that. And I know my listeners will appreciate that. I'll probably go grab a copy myself. I love to read. So, Dave, thanks for being here. I'm going to move you to the back room. If you'd hang out for a minute, I'm just going to say goodbye to my audience, and you and I will circle up for a couple minutes. Thanks again.
Thank you.
Hey, everybody. I hope you enjoyed this morning's episode. I really think that Dave carried a great message and a lot of information for sure. I'm going to encourage you, go get a copy of his book. Go to holisticwealthstrategy.com, and he's giving away a free copy of his book. So grab that for yourself and dig in a little bit. We always need to keep learning, right? And growing and gaining just a little bits of knowledge here and there, which help us grow. Hey, if you're interested in Dave's platform to track your investments and take a look at what's happening in your own financial arena, you can reach out to him for that. Again, thanks for being here. We're here every Saturday morning, Multifamily Unplugged. We always have a great guest bringing some type of content or information for you, helping you on your investing journey, your real estate journey, your multifamily journey. So if I can be of help to you at all, don't hesitate to reach out. I love to network and have conversations. Follow us on Instagram, and a great place to reach out to me there or on LinkedIn. And I look forward to seeing you all next week. Thanks again, everyone.